Major shakeup at Opendoor, new CEO, founders return, stock surges. Opendoor, the online home buying/selling technology company, has just made some big leadership changes. These moves have had a dramatic effect on investor sentiment. The stock price jumped significantly. The company seems to be trying to get back to its startup roots, founder mode, and realign itself under new leadership. Formerly COO of Shopify, Nejatian is now Opendoor's CEO. He brings strong product management experience and is seen as AI native, meaning he has been working with tech and products in ways that align with modern AI-centered strategy. Co-founders Keith Rabois and Eric Wu are returning to Opendoor's board of directors. Keith Rabois will become the chairman. They're being positioned to bring back the founder DNA, more energy, vision, perhaps more risk willingness or innovation. Two existing board members, Glenn Solomon and Pueo Keffer, have stepped down. Opendoor has secured $40 million in equity investment from Khosla Ventures and Eric Wu to support the business. After the announcements, Opendoor's stock price jumped sharply by about 30 to 36% in pre-market/extended trading. Retail investors are excited. There's a group sometimes referred to as the Open Army that has been pushing for these changes. The stock has already been on a strong run in recent months. The leadership changes seem to have added fuel to that momentum. Despite all the enthusiasm, Opendoor has never reported an annual profit. Analysts expect large losses in both 2025 and 2026. Revenue is declining compared to its peak, from about $15.6 billion in 2022 to much less expected in the coming years. How well Nejatian can execute, turning the vision into improved operational efficiency, cost cuts, better product experience, AI integration, etc. How the founder DNA, injected by Rabois and Wu, influences decision-making, strategy, risk tolerance, innovation. Whether the business model is evolving in response to prior challenges, e.g. how to handle declining revenues, how to deal with margins, inventory, housing market conditions. Next earnings reports/financial disclosures to see whether the leadership change is producing material improvements. To sum up, Opendoor is going through a major reset. New CEO, founders returning, board changes, fresh investment. Investors are optimistic and reacting strongly. But the company has its work cut out, delivering profits, steady revenues, overcoming past weaknesses. Whether this becomes a turnaround story depends on execution more than just leadership headlines. There's also skepticism about whether the push toward being AI first and having new leadership can translate into operational improvements. It's one thing to change leadership and excite investors, another to deliver financial results.